Hello trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a look at Bitcoin smashing 70K in recent trade, looking to where Bitcoin could head in the near future. Is 100K on the table? We'll take a look at Bitcoin volatility and how that maps onto its current price, as well as what could be next for stocks, bonds, and US dollar, covering as many asset classes as possible relative to this recent huge rally in Bitcoin that hasn't stopped, and it didn't even take a breather at 70K, as you'll see here in recent trade, blowing right through it, first time ever. And just to do a quick historical check on where we've been and where we've gotten to, you might remember that this market started 2023, and I know that now we're in March of 2024, but a little over a year ago, under $20,000, and so now above 70. You're talking about more than a 300% ascent here in Bitcoin since the start of 2023, and nearing again. We'll see where the market ends up. And it, of course, going to depend on when you're looking at this, but not taking a break whatsoever at 70K or getting up there and then moving lower like we did historically at the previous high of around 68K. You'll remember at that 68,000 level that Bitcoin got up there, fell, spent some time in the 50 to 60 handle, got back up to those high 60s again, and then we saw the crash down to below $20,000 at certain points after that previous high of around 68K. This time, getting up to 70, and really the only reversal that we saw was that 1 or 2 day reversal of a couple of trading days ago, where you'll remember Bitcoin was down 5 or 6 or 7%, depending on when you were looking. And since then, the bounce back and then move through 70K has been pretty unrelenting. We'll see where it goes from here, but you'll see, given the recent volatility environment with Bitcoin, a lot of different prices on the table. And of course, I do want to remark that while 100K might be on the table, below 50, 40K also on the table, and I'll dissect exactly what that means here, because right now, let's say Bitcoin has an annualized volatility of around, last time I checked, it was more than 50%, but let's just say it's 50%, even on the conservative side of recent trading metrics. That would tell you that there's a 1 standard deviation chance, or a confidence interval of about 68% chance that Bitcoin is within a range of plus or minus 50% in the next year. That's an annualized volatility number. And so that 50% number essentially saying there's a 1 standard deviation chance of plus or minus 50%. Well, given the price point of, again, let's just be conservative and call it 70K, then that means a 50% move would be plus or minus 35K, which gets you up to 105 to the downside, but also gets you cut in half to the down, or 105 to the upside, sorry, but also gets you cut in half to the downside, right? And so essentially, derivatives traders, options traders, all different types of traders come in, and where they are buying and selling options prices at gives you that volatility level. And then from that volatility level, you're able to project out what could be the future range of Bitcoin. Now, of course, a couple of things. This range changes continuously. The prices for options and volatility and everything change continually. Not only those, but the underlying market, Bitcoin's price changes continuously, right? It doesn't even take an hour or a day off from trading in the spot market. So all these things are in flux, but just lets you know that given the current market environment, 100K is within the realm of possibilities. That 1 standard deviation is usually seen as a relatively conservative view of where markets could be, but also have to keep in mind that they're pricing in a significant chance of this market could get cut in half as well, and that's what that 50% volatility means. Now, what's this mean for the rest of our asset classes? And you're going to see something that I think is really, really interesting, but might not be as helpful. It's like almost doing an experiment where the results are there's no correlation, or there's not only not what you were expecting to see, but there's really no expectations, which can be very helpful. And what I mean by that is the S&P 500 right now trading unchanged, essentially. It's been down a little bit on the same day that Bitcoin moved through $70,000 for the first time, but essentially unchanged, not a real big move one way or the other. And now stocks have historically held a little bit of a positive correlation to Bitcoin. If you look at historical correlations between the S&P and Bitcoin, they've been on the positive side. But currently, and today is a good example of this, the correlation hasn't been strong. Though it might be positive, it might be small positive or weak positive. And I mean, you just look at the fact that Bitcoin is blowing out $70,000 up, depending on when you're looking, 2, 3, 4, 5%, and the S&P is unchanged, down slightly, and that tells you that one isn't necessarily leading the other. The correlation's not very strong. Now, as we dig a little bit deeper into some other asset classes like interest rates, you might have a little bit more of a correlation or a basis to make that, okay, interest rates being lower, that means more growth in markets like technology or potentially cryptocurrency, also means more liquidity, more cash on people's hands to buy speculative assets. And that's no shade on Bitcoin, but right now, a little bit of it trades like a little bit of a speculative asset. And so lower rates might be good for Bitcoin demand. And you have seen, as Bitcoin's moved through its highs in the last 2 or 3 weeks, interest rates have moved lower in that same time, and bond prices have moved higher. But again, not a strong correlation. Again, on the day that Bitcoin is moving through all-time highs, interest rates aren't necessarily sinking through the floor, right? And so you're not seeing that direct of a correlation here, although you do look at the same timetable the last couple of weeks where Bitcoin's really had a strong rally from trading around 50K to very quickly above 70. And in that same time, yields have fallen pretty good from close to 4.5%, now closer to 4%, looking at the 10-year, which is a good benchmark for U.S. interest rates. Lastly, I do want to dig into the U.S. dollar piece. And again, now we're 3 for 3 on the fact that there's a historical relationship here, but it's not that strong. And especially right now, crypto seems to really be on its own. And similar to interest rates, U.S. dollar has fallen recently amid the Bitcoin rally, but it hasn't felt so direct. Using today as an example, again, Bitcoin moves through $70,000, and U.S. dollar is down in some major forex pairs, but it's actually up pretty significantly against the pound. It's bounced back at certain points against the Canadian dollar and the Japanese yen, and it's up against the Australian dollar here today as well. And so a little bit of two-sided action in all three of these markets that is not correlating necessarily one way or the other, up or down, compared to Bitcoin's all-time highs above 70K. And so maybe not a trade off of Bitcoin and these other asset classes, but you can feel good knowing that with this recent price action, the correlations are saying if you're in a few of these assets or trading all of them at the same time, you are a little bit diversified given these recent correlations. So Bitcoin moves through 70K. We'll see what's next. Could get beyond 100, could get cut in half given recent prices in the derivatives market and volatility in Bitcoin. And what's next for stocks, bonds, and US dollar is likely going to depend on those asset classes individually, as there's not very strong of a correlation to be made between Bitcoin and those other assets, at least for the time being.